everyone, it's Christopher from Serene Education with the 4 majors and notes update for the 12th to the 17th of April 2015. Got the 4 charts in front of me. I'm just going to look at the first pair of the day is the euro against US dollar on the monthly. Looking at the monthly just to see how this month has progressed. The month of April, we are going into the 3rd week of April. Just want to see how it's been panning out. So we'll just zoom in. You can see we're obviously plotting monthly candles here, so we see clearly that the overall sentiment is one to the downside for euro against the US dollar. You'll notice that last month, in fact, we saw quite a bearish candle. However, we saw a slight pullback towards the end of March, and subsequently you can see the start of April, we saw some pullbacks even further or deeper into the March session. However, as this month has progressed, we've seen negativity coming back into the market. So looking for opportunities going into April, we would have liked to have seen prices actually trading lower than the current close of last month. So effectively, if price was trading above the close of last month, then this would actually be profit taking. So it would have been a pullback. It might have been fundamentally driven news-wise, but you can see that price was trading above that. So any trading that has happened or occurred above the low of the close of last month has been against market trend, which is negative. Okay, you can see here quite clearly looking at the indicator box that the overall bias on the chart, long-term, monthly, weekly, daily, and 4-hour, is very much to the downside. So therefore, if we're looking for trading opportunities, we want to be trading with long-term trend. So to look for opportunities, to keep it as simple as possible, is to then look for a continuation with trend. So in this case, the reason why I've drawn a horizontal line at the low of March's close is primarily because I want to see price trading lower than that for the new month, i.e. this April, to then look for any buying or selling opportunities, selling opportunities with that long-term bias. Okay, and my first target would be ultimately the low of March, aggressively the low of the March. Get below that, then price is making an all-time low for 2015. Therefore, I need to pan out to see where my next viable target is. And you can see here on the euro against US dollar, we have to look to the lows or the current support and resistance lines that go way back to 2001, 2002. So we're looking around this level here, which is roughly down that the 0.98847 level. They're thereabouts. It's not going to be spot on. It's just an area of consolidation, and that's primarily why I've just drawn it on. It's just an area where price is consolidated in the past. It might be slightly lower, might be slightly higher, but it's an area where price is physically consolidated. So thereabouts is where you would like to be taking profit off the table if and when price actually closed lower than March's low, which is at this level here, which is roughly around the 104452 and change. So looking down into the smaller time frames, i.e. the weekly, you can see quite clearly on the weekly I get a sell signal on the weekly, and you look at the box here and it's very much telling me that everything is looking rosy to the downside. So a quick look at the overall sentiment. I'm looking for an arrow very much way up here in April of 2014. In fact, looking at the moving averages all above price, which is actually a negative signal, which is what we want. Red arrow, red candles, the color. The moving average all above price, which is negative. The RMO below the zero level, which is a negative sign. The OSMA clearly below the zero level, which is here again a negative sign. So I should be looking for further negative sentiment. Here recently, you'll notice that the last month, in fact, we haven't seen any bright red on the OSMA. Now, that's telling us we should be looking for either a pullback with long-term sentiment, in this case, which is negative. And you can quite clearly see that price over the last 3 weeks, in fact, has failed to make a new low. Okay, remember, we want to be trading with long-term sentiment. In this case, euro negativity against the US dollar. So therefore, I want to see any weekly candles making new lows going forward. And you can see that price has not made any new lows on any of the weeks going forward up until this close that we've seen this week. Okay, so therefore, you can see price is now moving back in line with long-term sentiment, which is negative. Therefore, I should be looking aggressively to trade towards those lows we saw back here in late February. Okay, so when I drop down to the daily, You can quite clearly see, there we go, no new highs through the latter part of March. Clearly the 50 period moving average acting as a resistance level for price going into the start of April, and we had a nice evening star formation here, and you can see the bias over the last 4, 5, the last week. In fact, we've seen negativity really playing out for this particular pair, breaking through the prior support and resistance level here, which would be in this level going into the 1st of April, in fact, which would have been our little intermediate trend up, the pullback trend. And you can see now that nice bearish engulfing candle through Thursday. We saw the outcome on Friday pushing it lower. And you can see how everything over here is very much setting up for further negativity. Okay, so here aggressively we can now counter trend, trade back with trend direction back towards the lows that we saw in March of this year in excess of 146 pips. I'm not going to get all of that, but aggressively you could actually look towards to target those levels to the bottom, slightly further up. In fact, so maybe about 120 odd pips or so to that level. Let's have a quick look again. Yeah, 128 to the level. So now on a weekly, just go back to the weekly. What I want to see now to see any opportunities to trade lower is to then look for a daily candle or aggressively a 4-hour candle to close lower than last week's low, the Friday close low, to then look for an opportunity to the downside. So when I drop down to the daily, that's the Friday close. Yeah, you can see red arrow closed on the Friday. Perfect. Everything's in my favor. Arrow, candlestick, RMO, OSMA, all pointing lower. 2050 an institution above price, which is a negative signal in itself. So therefore now I should be looking for Sunday evening closed lower than Friday evening to then look for opportunities aggressively with trend towards the first target, which would be in the mid-month March level here. So 4-hour time frame here again, selling signal. Look at the 4-hour, all looking good. So here on the 4-hour, you can see the last 12 hours leading into the close on Friday, the price actually moves sideways. So here, looking for aggressive bearish candle close lower than these levels over here to then constitute a potential trade towards that mid-March level down here, which is at that 10479. Get below that, then we're ultimately looking for further shorting opportunities for the remainder of April going into May of 2015. Sterling, here again, looking at the monthly time frame to see how things are panning out. You clearly see on the indicator box, everything's looking very, very negative indeed. The R-squared isn't complementing any of that sentiment at the moment now, predominantly because we've seen a lot of speculation or speculative consolidation recently. The good things for sterling, though, in terms of further continuation to the downside, is price has physically closed lower than a prior major support and resistance level in its negative trend to the downside, which were the 2013 lows. We had almost 7 months of consolidation here in 2013, and you can see price action through January, February. We saw consolidation, and then the March candle punching lower, and you can see that price has continued lower over April. Okay, making new lows. Slight pullback there again, like as I mentioned on Euro. We would like to see going into April, we want to see price on the weeklies and the dailies making new lows to constitute further continuation with long-term trend. You can see everything is looking still negative. Red arrow, the candlesticks, all the moving averages above price in order. The OSMA and the RMO all negative, clearly indicating we should still be looking for a negative bias for sterling against the US dollar, and that's clearly playing out. So April, we want to see new lows created, and sure enough, we have seen it on the weekly time frame, new lows being created. Perfect. This week, we saw the past 3 weeks, in fact, consolidative. Okay, let me just move this box over here to show you. Okay, so the last 3 weeks, 1, 2, 3, 4 weeks, we're not seeing any new lows breaking below 147420. This week that's just currently finished has given us a bearish engulfing counter close lower. And now, and that bearish engulfing counter closing lower has now informed us we should be looking for a continuation because it's now formed a swing low. Okay, swing low with long-term sentiment, which is negative. Very, very important, guys, to understand that. Okay, so there we go. Swing low, swing low, swing low, swing low, swing low, swing low, swing low. Perfect. So now what we should be doing for this week is to look for any daily candles closing lower than Friday evening's close. So dropping down to the daily. There we go. Here is Thursday's candle breakout. of that consolidation. And so Friday we should have taken advantage of that breakout on Thursday. Nice bearish engulfing candle, very full, very little wick, a directional candle. You can see here an exhaustion candle on the Wednesday. 20 period moving average acting as a clear resistance level here for price as she moved into this level here and forcing a low. So here we should be looking for further negative opportunities with long-term sentiment. So now where's our target? Well, go back to the weekly pan out. Let's have a look. The next particular level is going to be this one over here that we saw back in 2010, guys. And the next level below that, you're looking, starts getting a bit rough around here, but looking roughly around that level here in 2009. So straight away, we'll take this one in 2010 as our next target. So when we drop down to the daily, we'll just pan into so you can see more of the chart. Just squeeze price, and the issue is over here. So there is that next target, which was the 2010 lows, and where price closed on Friday to those levels, you're looking in excess of 200, just over 200 odd pips to that level. So now when we drop down to the looking for any opportunities, let's see if Sunday makes new lows, and equally Monday, Tuesday, Wednesday of this new week, because getting back to the weekly, we want to see a continuation now. Okay, so vitally important. So when we drop down to those daily and 4 hour for entries, you can see opportunities to that level. Okay, look at the actual setup on the daily. Arrow, candlestick, 2050 an institution and above price, all negative signals. RMO below the zero level, a negative signal. And you can see that the daily candle on Friday closed low for the first time. You can see consolidation. The MACD is a trending indicator. So MACD above in a negative trend is just consolidation. You can see price went sideways. And clearly now you can see we've moved back in line with long-term trend. Therefore, the OSMO has moved back in line. So we've had the crossover over here. And now you can see that the trigger alerts that the faster line is broken below the slower line. Therefore, we're getting a continuation. US dollar Swiss franc. Here again, a lot of consolidation for price over the years. And you can see very much so has been the case through 2011, 12, and 14. In fact, we saw the major decision in January for the Swiss National Bank to unpeg its currency against the euro, which led to this massive move on any Swiss franc crosses that included the US dollar. Okay. So, however, what we've seen since then on the weeklies is, over the last couple of months, is price failing to make any new lows and therefore re-attempting the current high that we saw in January. However, once we got there, you can see a major pullback through March, in fact, which actually hugged down or closed below the 50% of the monthly range. Having said that, you can see that the close, however, was still positive compared to the February month close. So it still told us that there was still bias for US dollar strength against the Swiss franc. So therefore, going into April, we should have been looking for an opportunity to trade with that sentiment. And sure enough, you can see the pullback. But last week, in fact, we had a nice bull candle close, which is now formed higher. So here, aggressively, you can either target the current highs that price has been through over the last couple of weeks, which is here at 101235. And where price is trading right now to that level is in excess of 300 odd pips. However, on the weekly, if you look at the weekly here, everything's telling us to buy. But what we don't have is that blue arrow. We have blue candles. The 20, the 50, and the institution, RMO, and the OSMO are all above the zero levels and positive. However, we don't have a blue arrow. Okay. Aggressively, however, because of the close of Friday's candle, which was a bullish engulfing candle, took out the Thursday and Wednesday pullback. Okay, so therefore what we do is you can take the high of Friday close and then drop down to the daily. There you go. You'll notice that the daily Friday, Thursday candle closed higher than the prior month's candle, which is the March close. So therefore, this intermediate trend down, because we saw swing low, swing low, swing low, has now been breached. Therefore, we could see a recontinuation with long-term sentiment, which is telling me I should be looking for bullish sentiment. Okay, so here for this week, or the following week, any day we want to see Sunday, Monday, Tuesday, Wednesday, Thursday, Friday closing higher than Friday's close, ideally a nice bullish engulfing candle to tell us that the continuation is there. We would then get a blue arrow, which we clearly don't have at the moment now because the last arrow we got was up here and it was red. But you'll notice, however, that at this stage we have blue candles, which is a positive sign, 2050 and institution, which is a positive sign, below price, supporting price, which is a positive sign, the RMO, which is still above the zero level, which is a positive sign, and the MACD, which is a trend related indicator, which is now bright green. So it's telling us that we're back looking for a recontinuation of the long-term trend, which is up. So therefore, this week, we're looking for a bull candle close higher, and aggressively, we're going to target the prior resistance level high that we saw through the early parts of March as our first potential target for the remainder of April going into May, which is approximately 334 pips. I'm going to get all of it, but let's just say 250 at least are going to be pure profit if we get those signals going in our favor. Last pair I'm going to talk about is US dollar Japanese yen at the monthly. Just to start off, look at the consolidation, guys. Look at the past. It's the candles that we've seen over the past months. That's the reason why I like looking at the monthly time frames. The candlesticks tell me straight away what's been happening, and if I see a lot of hesitation clearly at this level, you can see a lot of these are spinning tops, pullback candle, spinning tops. There's a lot of hesitation, consolidation, hesitation in one particular area. I'm thinking, why would that be the case? Okay, and it could be two things. We could either be trading at a major support and resistance level high, and if I zoom out or pan out, I look along that line and you can see that price in the past, i.e. through 2005, 2006, 2007, and even further back to a degree, but through most of these areas over here, we saw a lot of hesitation, resistance level highs. So therefore, people who would have actually, or traders who had actually traded either here on the breakout of the institution, would have targeted at this level as a major long-term target because of the fact that price previously consolidated at this level at a particular time. So people have started to take profit off the table here, and fundamentally we haven't had any really great data out for the US dollar over the past couple of months or so. So we led to a lot of hesitation at this level. However, saying that, the overall bias on the indicator box over here on our long-term sentiment is still very much of upside. However, you'll notice that the weekly, the daily, the 4-hour, the R squared is not complementing that sentiment that we're seeing at the moment. And that's predominantly because of the consolidation that's taking place over here. We're starting to see a bit of negativity creeping into price action because of the fact that we've taken 1, 2, 3, 4. We've seen consolidation for a longer period of time. If it happened for a month, happy days. Now you're seeing 1, 2, 3, 4 consecutive months of consolidation at this level. It doesn't bode well for the US dollar. The longer this consolidation occurs, the more negative sentiment is likely to come into action. However, you look at the candlesticks, you'll notice that each month we've seen price actually taking back that negative. So we saw January pull back after after an indecisive December. Then we saw February, March moving back up again. So we know that the bias of here is still very much in favor of US dollar strength. However, we want to see this current resistance level being broken. So therefore, what we want to see is a bull candle monthly move higher. So dropping down to the weekly, you can clearly see that consolidation clearly on the chart now that's occurring. So current resistance level, which was the November, December resistance level high, you can see going into March, we actually saw price reattempting those levels, but failing to break out, and we saw a bearish engulfing candle, which led to a very, very aggressive counter trend trade, which we took profit at the prior swing support level, which was this level around here, which brings us back to the 20-period moving average, which happens to be a major support for price over the past couple of months or so. So therefore, pullback, but you'll notice that last week's candle was a bullish engulfing candle, okay, at a 20-period moving average. So now what we could effectively be seeing is maybe that bullish sentiment coming back into the market again. So we saw 5 days where the US dollar actually made new highs through that week to give us this bullish engulfing candle close for the end of last week. So we had a inverted hammer over here, for example, which gave us a clear signal where we could see a change in market sentiment, but we wanted to see a candlestick to concur that. And sure enough, last week's candle actually gave us that bias. So then when we look at everything, the problem over here is we look at the arrow and it's still red. Okay, we clearly still see resistance above price. The 20, the 50, and the institution are still very much below price, so that's a positive. The RMO is above the zero level. That's a positive. However, the MACD, which is a trend-related indicator, is still negative. Why is that? Because we're still in a consolidation range. Okay, guys? Clearly see that as a consolidated range. For this to be a trend again, we need to see either a break higher to continue with long-term sentiment, which is up. If I just pan out, you can see that. Or we fail to see any new highs for the US dollar, and a break lower than the consolidation low would then set up for an intermediate trend in the opposite direction. Okay, so if you are looking to trade the US dollar Japanese yen, you're going to be doing so very aggressively on any of your trades within the range. So now when we drop down to the daily, you can still see the bias of the candlesticks are blue. So therefore it's telling me that we should still be looking for bullish setups, okay, with long-term trend. And if you look at the daily, you can clearly see that Friday failed to close higher than the Thursday breakout, which was at this level over here. So now you can see where price is trading at. You can see there's a clear support and resistance level on our daily at that exact spot. Clearly over since December, in fact, we've seen consolidation, pausing, if you want to use another word, at this level. Okay, so it's imperative if we are to see any further buying opportunities within the consolidative range that we're seeing on our bigger time frames, we would then need to see the price making a new high or breaking Thursday resistance level highs to then allow us to tap into the the opportunities to the upside, which would be in excess of 100 odd pips. So you can see now within the range, there's some profit to be made, but it's going to be far more aggressive, far more riskier because you're trading within a very messy consolidative range. So the US dollar, Japanese yen, you got to really be aggressive in terms of looking to trade within the consolidative range aggressively. If you can't, if time restrictions, etc., and your money management don't allow you to trade that aggressively, then it's far better just to back out, look at a weekly break, close higher, which is ideally what we want because we're still seeing US dollar strength against the yen, or a break of that consolidation low to then see a change in market sentiment to then see US dollar negativity for the next quarter of 2015. Okay, so that's the US dollar Japanese yen finished. So overall, we've gone through all four majors. I hope you can see the benefits of trading utilizing the FX8 and how we can best get opportunity, look for opportunities to trade with going into the following week. I hope you found it beneficial. I hope to see you guys on our chat site. If you want further information about any of our trading strategy templates, please drop us an email at the email address at the end of this video. I hope you have a fantastic week. And please make sure that you are aware of any fundamental news that's coming out this week. I know there's some big news, some big data figures that are coming out for the Chinese market in terms of the GDP quarter-on-quarter figures. Vitally important, but there's also a number of other other major indicators, data announcements for any of the other crosses. So please back it up with sound money management rules, and you should be on a winner. I'm going to leave you with that. Hope you have a fantastic week, and I'll see you shortly. Until then, you guys trade serenely.